All right, everyone, here we are with ticker symbol HYLN, Hyliion Holdings Corp, previously known as Tortoise Acquisition Corp, and was trading under the ticker symbol SHLL. So before we jump into this chart, I do want to ask that question at the end of this video. So I want you guys to know that I will be doing a trivia question at the end of this video. We tried it out yesterday. I really appreciated everyone's participation. I appreciate you guys engaging within the comments down below and also paying close attention to these cues that are very important for the next coming days. So I will have a trivia question, so stay tuned till the end of the video. And to all my first time viewers and investors, welcome to my channel. And to all my subscribers, welcome back. So here we are with Hyliion actually bouncing back from that 1810 mark, right? That's the lowest point that we've seen it reach in the bearish run. It bounced back, it broke through the 50-day moving average, and from that point forward, it has hit newer highs, and it hit the highs here of 2240, 2241, give or take, right? 2240, 2241, give or take. I would say to be exact, 2241 would be the point here of the highest point reached in this bullish run. Now, it slightly dipped and leveled off, and here we are at 2112, and we're significantly slightly above the previous point of yesterday, but we are significantly above the 50-day moving average. So super important to keep that in mind, that we're above it, so we're in bullish territory. The moment we're below it, we're in bearish territory. So the 50-day moving average is 1981. Keep that number in mind, because that's what's going to let you know on what side of the chart we're in and where this could be heading. As long as we stay above it, the bulls are in control, and this can continue to hit new resistance levels and new highs. So let's go ahead and see here what our new resistance level is based off the last couple of hours of the day and how it turned out this way. And then also our lowest point reached today, which is our new support. I want us to keep in mind these numbers, because even though this bearish candlestick is slightly a little bit higher than this bullish one, this is the highest point before it started to fall. It had already started falling here. So it's super important to keep in mind this resistance. Now, if this resistance is broken through, the highest point reach again is 2241. It's a significant number for the bulls, and that's what's going to allow us to get to new highs and new resistance levels. So we're currently at 2112, but for the bulls to continue this momentum and get further away from the 50-day moving average of 1981, they need to break through 2208. And by breaking through 2208, they can turn that into a support to reach new highs and new resistance levels. So super important for the bulls to accomplish that. They need to, so that they can continue to pull away from the 50-day moving average. Excuse me for that. They need to go ahead and break through 2208, turn that into a support, and start to reach new highs and new resistance levels. So I want to emphasize, the bulls need to break through 2208 to turn that into a support to continue this momentum, because this 50-day moving average will catch up to the price by default, giving more leverage to the bears. Now, on the other hand, we have what the bears want. And even though breaking through this support, we are still in bullish territory, we still have to monitor this, because the trajectory could change fairly quickly, even though it's going downwards and still in bullish territory. So this support level here is 2053. That's the lowest point reached in this bearish run after the bulls brought this up to new highs, leveled off and slightly dipped, and here we are leveled off at 2112. But if the bears start to bring this one down, they're going to try to break through that lowest point of 2053, break through it, pull away from it, and get closer to the 50-day moving average so that they can cross it and get back into bearish territory. So super important, and I want to emphasize this to all investors. Pay close attention to the behavior of the stock. If it breaks through 2053, and how quickly is it getting closer to the 50-day moving average, or how is it behaving between 1981 and 2053, and are the bulls trying to reappear in this area to bring this back up and stop it from going into bearish territory. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watch this video. So, trivia question. My trivia question for today is, what is the highest point that the bulls have actually hit in this recovery, and why is it significant? There's a significance to it, and it's very important for this chart to continue in its trajectory and also for this chart in general. So what's the highest point reached in this bullish recovery that we're right now in bullish territory, and why is it significant, and what's the purpose of it, and what could it tell us about the chart in the next coming days or weeks? As always, thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy Like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you are going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.